There are only two real tax havens left in Europe. But these aren't the flashy six-figure buy-in destination that you're used to hearing about. Instead, they offer something far more valuable: legitimate tax systems that can save you thousands or even millions every single year. Now, what if you could legally pay just 1% in business taxes? What if your foreign income was untaxed no matter where you earned it? And what if the government actively competes to attract entrepreneurs rather than drain their pockets? It sounds good to be true, but I will help you out. It's completely not. These tax systems feel like hidden gems, but they're fully legal and transparent. Picture this: running a six-figure business, keeping over 99% of your revenue, and banking like a local without the need of a complex offshore setup. And I know what you're thinking, like about Monaco or Switzerland, but nope, I'm talking about two countries that most people overlook. Stay with me and I'll reveal exactly where these opportunities lie, but be warned, there are risks if you don't get it right. The countries we're talking about are Georgia and Montenegro. Still under the radar, and they're still offering tax systems that feel like a loophole. Only thing is, they are 100% legal and transparent. You can run a six-figure business, keep over 99% of your revenue, and bank like a local, either in euros or in dollars, with no complex offshore structures. Let me show you how this works, because the opportunity is real, but so are the risks if you mess it up. And let's start with the obvious. Most of Europe punishes financial success. I'm talking about Germany, France, and Denmark, for example. Once you hit six figures, they want half of it. Even Portugal and Cyprus have shut down or gutted their expat-friendly tax programs. But Georgia and Montenegro went the opposite direction. Instead of chasing multinationals, they opened their door for entrepreneurs, for consultants, for tech founders and investors. And why are they doing this? Because they know these are the people who bring value without draining public services. They're not selling tax dodges. They are offering legal systems where simplicity wins. So no foreign control corporation or CFC traps, no need to create fake substance or jump through artificial hoops. And you don't need to be a millionaire. You just need to understand how their banking and taxation models work, because that's where all the magic happens. Let's begin with Georgia. Their small business status is criminally underused. Earn, for example, $185,000 a year and you qualify. Flat 1% tax on turnover, no deduction, no loopholes, just 1%. So let's say you earn $150,000, you pay $1,500 in tax. In France, for example, that income will cost you $40,000 at least. So it doesn't matter where your clients are, they can be global. You don't need local employees, you don't need the physical office, but you need to become a Georgian tax resident. And once that is sorted, register as an individual entrepreneur, get a virtual address, open a local bank account, and you're good, and you got the 1%. Here's a kicker: Georgia uses a territorial tax system. So if your personal income is foreign sourced and stays outside of the country, it's tax exempt. So zero, nada, nothing. Digital nomads, for example, or freelancers, crypto traders, agencies. If your income doesn't touch Georgian soil, the state doesn't want a piece of it. If you run a tech company, you can apply for the virtual zone entity. Corporate tax will be 0% on all your foreign clients, fully legal, no minimum stay requirement, no fine print. It's all on their government website in English. Now, as for substance, while it's not required for individual entrepreneurs, most Georgian companies are looking to reinforce compliance, and especially for tech or trading firms. Keep things simple: a registered office address, a co-working desk or a private office, one local contractor or an employee, and a company email, invoices, or meetings handled from within Georgia. That's usually enough to check all the boxes. And believe me, you won't find anything like this in the EU. Now let's talk about Montenegro. Quiet, scenic, and criminally underrated, when it comes to tax optimization at least. They keep things simple: flat 9% corporate tax and 15% personal income tax. No complex brackets. So no sneaky surcharge or whatsoever. Just clean and predictable rates. You don't even need to live there full time to open a company. And if you do want a residency, it's straightforward. Set up a business, show basic activity, and you're in. So no inflated golden visa schemes or no €1 million investments. Just a normal path for people actually running a business. Although Montenegro isn't fully tutorial like Georgia, it plays nice with foreign earned income. So if your clients are abroad and you're billing through a Montenegrin company, you're looking at 9% tax. Legit, on paper, and easy to manage. After that, you can take dividends with minimal personal tax exposure, especially if you're structuring things right. They're also not too aggressive on the CFC rules, so you're not constantly looking over your shoulder. If you operate internationally, it's something you don't need to worry about. And yes, banks are crypto friendly. So if you know where to look, account openings can take some time, but they're really doable with the right guidance. Substance requirements are also flexible, so not overly strict, but don't fake it as well. A registered office, somebody on ground to support operations, and basic accounting and occasionally visit or locally handle decisions will usually do the trick. And you don't need to uproot your full life over there or pretend you have a headquarter in Montenegro. Overall, it's just a sane, accessible option that happens to sit right next to the EU, and barely no one is talking about it. Let's talk about banking, because even the best tax setup means nothing if you can move your money easily. In Georgia, banking is straightforward, so you can open a personal and a business bank account in the local currency, in dollar and in euro, with just a passport and a local address. Banks like TBC Bank and Bank of Georgia are top choices, offering solid online banking services, multi-currency cards, fast local transfers, and great fintech integration. It's simple, efficient, and built for international transactions. Montenegro offers equally smooth banking, so you will bank in euros with institutions plugged into the EU system. The top banks like NLB Bank or Raiffeisen Bank Montenegro are fully integrated, providing clean compliance services that won't raise red flags with Stripe or with PayPal. It's all straightforward banking with no hidden complexities. And the best part, neither country has EU-style reporting. So that means less paperwork, fewer delays, and faster execution. Now, before you start booking your flights or setting up shell companies, let's talk about what not to do. So the first step is assuming a tutorial tax system means you can do whatever you want, because it doesn't. If you're physically in the country and doing work, some income might be local. So even if the client is foreign, the context really matters. The second trap is mixing personal and business income. So in Georgia, your 1% small business status is for individuals and not for corporations. So if you route payments incorrectly, you could lose the benefits. And if you hit that 500,000 Georgian lira cap, your rate jumps to 3% or even more. So if you don't switch structures in time, it can be a problem. The third trap is visa overstay. So you might not need a visa to enter, but if you start living full-time without registering, that opens up questions about your tax residency, compliance, and sometimes even your legal status. The last thing you want is a tax haven is becoming a legal nightmare because you didn't follow the basics. And again, before you start booking your flights, we need to address what you must handle in your home country before you make the move. And this is where most people completely mess up. So they think that they can just pack their bags and magically become tax-free, and that kind of thinking will cost you actually a lot of money. Here's a critical point. So becoming a tax resident in Georgia or Montenegro does not automatically cancel your tax residency in your home country. So you could end up being taxed in both places. So what do you need to do before you leave? First of all, research your home country's exit requirements. Every country is different. Some want official registration, while the others might require specific forms to be filled in. Next, don't just leave whenever you feel like it. The timing of your departure really matters, and matters a lot. So leaving in the middle of a tax year could trigger unwanted tax implications. You will also need to take care of your financial obligations. So close or transfer your bank accounts, settle any outstanding taxes, and make sure all your filings are done and also are up to date. Document everything, keep records of your departure, the severing of your ties with your home country, and your arrival in Georgia or Montenegro. And also check if your home country has a double tax agreement with Georgia or with Montenegro. So if not, you may be liable to pay tax on 100% of your income in both countries with no refunds. Now let's talk about the 183-day rule, because both Georgia and Montenegro work with the same way here. Spend 183 days in either countries within a 12-month period, and you can automatically become a tax resident, no exceptions. So once you establish residency, get a tax residency certificate right away. This is the legal proof that you will need to show your home country that you have shifted your tax residency. And here's the most important piece of advice: don't figure this out on your own. Making assumptions about tax systems you're unfamiliar with can lead to back taxes with fines, with penalties, and all of that. At MFast, we guide you through the entire process, from properly exiting your home country to ensuring you establish compliant tax residency in Georgia and Montenegro. We make the transition seamless and protect you from all angles. And the bottom line, this strategy works, but only if you get it right. Rush through it or skip the proper planning, and you could end up worse off than you ever started. And this is where smart planning really pays off. In Georgia, open your personal bank account before you hit the 183 days. It makes things just smoother later. Apply for small business status early, even if you're not earning yet. And if you're working with foreign tech clients, the virtual zone can be a great move. Just set it up as a separate entity. In Montenegro, set up a local LLC to access the 9% corporate tax rate. If you're not living there full-time, appoint a nominal director. For capital gains or future exits, holding assets through the company can be a smart play. And whatever you do, do not rely on Reddit or on YouTube for this stuff. Work with someone who sets these things up for a living. This is where things get really interesting. So you could use Georgia or Montenegro as just one part of a bigger tax strategy. Imagine you're running a location independent business with clients all over the world. Your company could be registered in Georgia or in Montenegro, while your personal residency is, for example, in Dubai, where you get the benefit of 0% income tax. You'd bank in both places, spreading things out across different currencies, and even invest through Singapore, where capital gains are untaxed. Want to explore how this might work for your specific case? We have helped founders, consultants, and even retired crypto guys set up this on the right way. So from company formation to banking to real estate, we can help you out. Book a strategy session. We'll walk you through the real world steps, the risks and the opportunities, because tax freedom isn't about dodging rules. It's about using the right ones in the right place at the right time.